Studio is Greg Katzenellenbogen, Portfolio Manager at Sanlam Private Investments. Greg, thank you very much for joining us on the Closing Bell desk. Telkom came out with full year results today. Headline earnings per share down over 92%. Earlier, Chris Bishop spoke to the CFO, Peter Nelson, and asked him what was behind the 92% fall in that headline earnings per share line. The stock a short while ago up almost 2% at 37 Rand. So the market's still positive on Telkom. Here's that interview.
Technically, the headline earnings per share decline, and I think the figure's been quoted by yourselves at 92% decline. But what that number does, it excludes a lot of the profits, but includes a lot of the costs on those profits. For instance, it excludes the profit we made on the Vodacom transaction, but it includes in the calculation cost relating to STC on tax and share compensation expenses and the like. If you look through all of that and make like-for-like adjustments, the headline earnings per share normalized decreased by 11.2%.
Now, what about multi-links in Nigeria? It seems you've got quite a bit of a problem there. There are allegations that this is yet another misallocation of capital.
Well, I'm sympathetic to the view. I mean, when you basically write off the amounts that we've done, there's little excuses that can be put on the table for it. We did allude to the fact that the technology that we've bought into now appears to not have the right business scale. We expected CDMA penetration in Nigeria by now to be some 25% of the market, of the total mobile market. It's only 10%. And we are only one of 4 players. We just cannot get the scale in Nigeria. Secondly, the Nigerian economy has plummeted. The utilization of mobile phones and how much people use on mobile phones has dropped significantly. So the business is under strain.
Why did you go in there with the wrong technology?
Well, just bear in mind, the technology was in the company that was bought. And we could upgrade and switch out of that technology in due course. And many companies across the world have done that. In time, we might want to switch into the LTE or into GSM. But that would require a further investment in multi-links. And it would be another 5 years. And we're very hesitant to do that. Our strategy short term is to fix the business, address the cost base very, very actively where we can, and then look at our options to reduce our exposure.
You said in the presentation that you wanted to reduce your exposure to Nigeria. A lot of the analysts here say, why don't you just sell out and cut your losses?
Selling out, exiting is one option. It's an extreme option. There are many options in the middle. No options are excluded.
What about your mobile strategy? You said that you're going to spend 6 billion on that in the next few years.
We're not underestimating. This is a very difficult challenge for us. But let's just unpack why we're doing what we're doing. We have faced year after year, we see some 9 to 10% of our customers, traditional fixed line customers, migrating to mobile. If we sit and do nothing, in 4 or 5 or 6 years, we will not have a business.
What about this confidence issue though? I mean, going back to your capital allocation, I mean, not only Nigeria, also Telkom Media, you wrote off a lot of cash there. Surely this is going to discourage a lot of people maybe from investing in you.
I'm sure, but you know, we've gone to great lengths to try and explain that some of these decisions, whether you're talking Telkom Media, multi-links, these were decisions that were made many, many years ago. We left carrying the situation on the ground today. We're trying to do our best to turn the business around it or exit or partially exit, and we'll do what the right thing is. Importantly for us is to make sure that whatever projects we tackle from here on forward, that we actually are being very careful and diligent and measured about what we go into and the returns we make. And you know, I think there's many successes. If you see what we're doing in terms of turning the cash flow management, the capital discipline, working capital management around in Telkom, you know, I'm absolutely delighted with where we're at on so many fronts that I think shareholders will soon begin to realize that we are taking very seriously our responsibility with capital and to make the return.
A lot of the analysts are saying, don't touch Telkom. It's a company that's going nowhere.
Well, if you follow it, you'll know that I've touched Telkom. I have shares. Our group CEO has shares. I think if you have a company that can generate a 5.5 billion rand cash flow in a year, I think this is a company to watch and to take a special interest in.
But what are you going to say to your shareholders? Maybe there's another capital misallocation like the ones I've mentioned.
Well, what I would say to shareholders, and shareholders understand full well, if you don't take risks, you don't make returns. The question is how to mitigate the risk, how to be sensible about the risk, and I'd like to be given, for Telkom shareholders, to give Telkom the chance to deliver on the mobile.
In studio, Greg Katzenellenbogen, Sanlam Private Investments. Greg, if you don't take risks, shareholders know full well, as Peter Nelson was saying, if you don't take risks, you're not ultimately going to make money. Do you believe in that strategy?
Well, yes, I do believe if you don't take risks, you certainly won't make money. But I think Telkom have taken quite a few risks and very little has paid off. You know, the money they wrote off for Telkom Media was not insignificant, and that left shareholders extremely disappointed. So I can only hope the money that they're going to put into their mobile operation will eventually generate a significant return.
And you're referring to that 6 billion rand that they've earmarked for their mobile strategy. Again, listening to Peter Nelson saying that they have to go this route because in 5-6 years' time, they're not going to have a business if they just focused on their fixed line strategy. Do you buy again into that rationale?
I do, I certainly do. I think that they have no option but to expand. They certainly will. You know, fixed line is a dying business and they need to expand, and I think mobile will help them. But I do think that, you know, with a change of management coming, that could also help Telkom going forward.
Looking at the mobile situation in South Africa, we've got a saturated environment. Surely they're going to need a lot more than 6 billion rand to chase market share in this territory with the likes of MTN and Vodacom. Both those companies continue to generate strong cash flows.
Very strong cash flows. What I'm concerned about with Telkom, if the 6 billion is not sufficient, as you saw today, they issued a special dividend as well as an ordinary dividend of 1.
And that was underpinned by the sale of Vodacom, the 8.7% increase in dividend.
Correct. So if they've certainly underestimated on the capex for the mobile, it could seriously affect the future dividend flow to investors, and I don't think that will be a good thing.
Are there any names that you would put on the table to head up Telkom at this stage, given the fact, as we've said, Ruben September will not be renewing his contract and leaving the position at the end of this year? Well,
my personal opinion is, you know, Jeffrey Hedberg will probably be the best candidate for that going forward. I think got quite a lot of experience, but thank goodness I won't be making that decision.
At 37 rand, what would you be doing with Telkom if one is looking for value in the current market space?
I think that it still offers some value at these levels. We give the management the benefit of the doubt. The share price shot up today on the expectation of the dividend. It did come back during late day trading, but I heard you say earlier that it finished up over 2%. So I think that at these levels it's certainly worth giving Telkom a shot.
How do you feel about the other telco stocks out there, the likes of MTN and Vodacom? MTN has disappointed for the last couple of months with corporate activity not coming to fruition. We did see at one stage MTN trading below 100 rand. It rallied last week to that 113 rand level, and I see earlier it was down 1%. We'll update you in just a moment on MTN and where it closed today. It's 11 minutes past 5 o'clock.
Yes, I think, look, I like MTN as a business. They're very strong cash generators, and they've got an international footprint, and their Middle East business is a pretty good business, so I do like it. I think when they fell below 100 rand, most stocks were falling at that stage, so it wasn't, you know, only MTN. But I do think that, you know, the market has got the perception that they're looking to deal at any cost, and I think if they do a deal, it will have to be, certainly they won't have to, they mustn't overpay. But I think also the problem with MTN is that when the last deal went south, the Bharti deal, the government essentially said that, you know, they don't want MTN to fall into foreign hands, and I think that could possibly limit the future corporate action.
Looking at some of the moves on the resource front today, we had Kumba iron ore, the top of the top 40, up 4 1/3%. Sasol rallying strongly, gaining 3 2/3%, and BHP Billiton adding 3.5%, so too Impala Platinum. All driven by the flexible exchange rate that the Chinese are now looking to with its yuan, and that is expected by market players to create other economies to grow as a result of China's growth. We're now going to start benefiting across the globe. Do you buy into that story, industrial metals rallying?
I certainly do. Well, obviously a stronger Chinese currency gives them more firepower, and they certainly have a lot of cash. a huge amount of foreign exchange reserves. I don't think that it's insignificant that the fact that while the purchases of US Treasury bonds had declined, the price of gold has been moving up quite strongly. So I do believe that the Chinese are quietly accumulating gold. And of course, this is very good. You saw the copper price jump quite sharply today.
It was up 3%, and zinc as well, from
very
an
much
industrial
so.
perspective.
But I think the interesting thing about China is that although this should negatively affect their exporters, the whole trick is that to get China to, and Germany as well, to start stimulating some domestic demand and try and get the Americans to stop spending so much and to start saving. The US savings rate in April was about 3.4% of GDP. In 2008, China's saving rate was 54%. Germany's is 11%. But countries like Malaysia and Indonesia, they will certainly benefit because if the Chinese goods become more expensive now, their goods become a lot cheaper, and that should be beneficial for the whole Asian region.
Greg, we're coming back to the resource story, but at the moment we're headed back to Telkom. We've got on the line Spiwe Chireka, ICT analyst at Frost & Sullivan. Spiwe, thanks for your time. Should Telkom pull out of Nigeria and do a backtrack on its multi-link strategy? That company did cost it upfront around 3 billion rand, and at this stage we don't seem to be seeing any fruition in that territory.
Well, I reckon that they should actually stay, because I was listening earlier to the earlier discussion, and I mean the fact that they're considering pulling out, I'd say that I don't necessarily support that decision. One of the reasons is, firstly, they have succeeded where other operators have failed, and I'm talking about the likes of Vodacom, where they pulled out of Nigeria years ago, and now they've had difficulty trying to get their foothold in there. Now, if we just look at the areas where Multilinks is currently playing in, so they are pretty much on the mobile side, and they're also doing a bit of fixed wireless access, focusing on internet services. The penetration for mobile sitting at about 50%, fixed line or fixed wireless access sitting at less than 3%. So if we look at that, it's a good indication of the opportunities that are there. The only thing that they really need to focus on is part of the strategy that they have, because initially when they went into Nigeria, we noticed that part of their focus was the mobile side, which means they're trying to take on the MTNs and the Zain who have been in the market, and they've entrenched the market quite significantly, which in the end is not a pretty good idea. So rather either focus on the fixed wireless access side, but also look at the enterprise services side in Nigeria, which we believe is still very open
Spiwe,
for other competitors.
Doesn't multilinks and getting that territory right really come down to the right management team focusing Nigeria and turning that into a money spinner for Telkom? Earlier, Greg mentioning that Jeffrey Hedberg is a prime candidate to take over the position from Ruben September when he steps down as CEO. Who do you believe should be up for the role?
Well, just to answer the first question, I think experience would have been is a key thing when going to markets like Nigeria, because it was sort of the first port of call for Telkom to get a direct presence in Africa, and it is one of the most challenging markets in the whole of sub-Saharan Africa. So the fact that the management then and the people that were running the company did not have significant experience around that area is what could have played against Telkom. And then looking at the prime candidates, at this point we have not really been able to identify anybody, but definitely a turnaround strategy person would be key at this point.
Well, captain with no ship doesn't sound like a good alternative. Let's focus on what's happening with revenue lines across the board, all under pressure, and we've got operating costs going up. So what is the solution for Telkom? Having listened to Peter Nelson, the CFO, just a moment ago, he said that 6 billion rand being deployed into the mobile strategy is key because they need to work on their mobile strategy, their fixed line business. They are not going to survive 5-6 years out if that is their sole focus area. But my question earlier was, is 6 billion rand enough to take on the likes of an MTN and Vodacom?
Well, it depends on what their rollout strategy is going to be. For the 6 billion rand, we do suspect that it is probably going to be sort of an incremental rollout. So start off with the key metropolitan areas and then slowly roll out. Then with 6 billion, you could do that, but obviously they will have to keep spending more as time goes. So the number will definitely come to more than 6 billion going forward.
In your opinion, do you feel that shareholders are getting tired of the misallocation of capital where Telkom is concerned?
Well, I guess it's all about taking risk. So I guess it's one of those where Telkom has been unfortunate that in those areas where they've decided to take risks, it has not necessarily paid off or they've not necessarily made returns. But we've seen it with all the other operators, MTN going to Sudan, even going to Nigeria, pretty risky, but they were just lucky enough it paid off.
But do you believe that Telkom ultimately can get it right and that the 6 billion rand mobile strategy may be their saving grace at the end of the day?
On paper or looking at it now, it is their saving grace. They definitely need a mobile strategy. I mean, they're the only operators in sub-Saharan Africa now sitting without a mobile strategy, and seeing what mobile strategies have done for other fixed line operators, which has been able to sustain sort of their core business. This is something that Telkom definitely needs.
What about Telkom being an acquisition target and that company going into corporate play? Would it be a possibility in your opinion?
It could be a possibility, but I guess the indications are that I don't think Telkom will be selling anytime soon.